Hello guys and welcome to another deep value video. Today taking an in-depth look at WRB Berkley Corporation, an American commercial lines property and casualty insurance holding company, organized in Delaware and based in Greenwich, Connecticut. So first let's start with the valuation metrics. We can see great free cash flow yield of 15.1% and a price to earnings of 15.78. Then let's look at the business metrics. We can see a return on tangible assets of 15.4% and a return on equity of 21%, both looking very good. Next, let's do grants valuation using a 4.3 earnings per share for 2025. We get an intrinsic value of $65. Next, going on to the DCF using a 6.5% growth rate, which is much lower than their past 9 years growth rate. With a 2% perpetual and an 8% discount rate, you get an intrinsic value of $197.74. Next, their historical multiple is exactly the same as their trailing 12 months multiple, so they're trading at basically the historical average. Their multiples valuation is $46, a bit below the current price. And next, we have the dividend discount model, of course, using a 6% growth rate, so slightly lower than the DCF growth rate. We get an intrinsic value of $92. As for dividend safety, they have a payout ratio of top 31%, which is pretty good in my opinion. Now the output, of course, of all these four is $99. Applying a 30% margin of safety, we get an intrinsic value of $69, about the current price. So this business is a great insurance company, which has had a great growth. They've had a great growth. Uh, they have a great valuation at the current moment. They seem to have their business on point with the great business metrics. I think this is all around good company. Of course, this should not be taken as investment advice, as I'm not an investment advisor, but you should do your own due diligence. And if you believe that my analysis is right, that they are worth their current price, then you should buy them. I think a 30% margin of safety is good enough for many companies, and especially for such a high quality insurance company. And of course, in the past, I've also invested a lot in insurance companies, so take my advice with a bit of a grain of salt because it is a bit biased. To end the video, I'd like to talk a bit about our field for today, ticker data. Ticker data is a tool that I use to make the video for today, so you can see here all this real-time financial data with the graphs and all of these with this template basically. This comes from Ticker Data. It's a great tool. From the link in the description below, you can check it out. It's pretty cheap, and I think that most value investors, most new investors, newbie investors, even seasoned investors will love it. So I just suggest to check it out. Also, do not forget to check out my investing blog from the link in the description below, where I recently posted an article on the 2022 crash compared to today. Hope to see you in the next video. Bye.